Amid market uncertainties fueled by trade tensions, Hong Kong stocks managed to record a near 300-point increase after a seesaw session thanks to the central government's proactive measures to stabilize the country's capital market. Cheryl Yun again reports.
The Hang Seng Index surged by over 600 points earlier in the day before briefly dipping 83 points in the afternoon and ultimately closed 299 points higher at 20,127 points, with a main board turnover of $433.1 billion. The gain came a day after logging a loss of more than 13% on Monday, the largest one-day decline since 1997. JD.com surged nearly 9%, while Xiaomi logged a growth of over 6%. BYD company forecasted a positive profit outlook, closing the day with an uptick of nearly 5%. Despite U.S. President Donald Trump's threat to slap an additional 50% tariff on Chinese goods unless China withdraws its counter-tariffs, China has intensified its intervention efforts to stabilize the markets in response to losses linked to the tariff war. Mainland Central Bank has pledged support to Central Huijin Investments in increasing its holdings in stock market index funds when necessary, after the state-owned fund earlier intervened to support domestic stocks following a market plunge due to escalating trade tensions. The Shanghai Composite Index gained 1.6% at the close, while the CSI 300 Index climbed 1.7%. Cheryl Yun, Cable News.
Meanwhile, most of the Asia-Pacific markets also rebounded.
Japan's Nikkei 225 index, after 3 consecutive declines, briefly rose by over 2,000 points, closing up more than 6% to reclaim the 33,000 mark. South Korea's Kospi index also saw a 6% rebound, ending the day at around 2,300 points. Australia's S&P ASX 200 rose by 2%, closing at 7,510 points. However, Taiwan's stock market continued to feel pressure, dropping by 4%.